All right, team, welcome back to this training. Inside of this training section, we are going to be double clicking into corporations and understanding, hey, why do people spend money to register corporations? Because in the previous training section, we talked about the sole prop. If you haven't watched that one, make sure that you are following along. It's very important that you do these trainings in order because there is a method to the madness. So in the previous training section, we went ahead and talked about like, hey, with a sole prop, you can pretty much, hey, it's free to set up. You can have a business bank account. You can take advantage of business write-offs and deductions. So then why even register for a dang corporation, right? Why would anybody even pay the money to do that? And so, yes, there are a lot of things that you can do with a sole prop, but there are, more importantly, things that you can do with a corporation that you cannot do with a sole prop. And so the two big reasons why corporations are useful is because of protection, aka protection liability, right? And tax savings. So that's exactly what we're going to go ahead and double click into. So that way, again, we're layering your understanding here. You will, by the end of this training section, understand, okay, hey, this is where the tool, because that's all these things are, right? These legal entities are tools. A sole prop is a tool. There's a time and place to be a sole prop, but there's a time and place where you don't be a sole prop. And so you will understand where the tool of being a corporation actually comes in handy. So let's go ahead and talk about reason numero uno, which is protection and liability. Okay, so this is the first big reason why people spend money and time to actually register and open a corporation. And that is that it protects you legally from liability, okay? Why? Because what happens is that in the eyes of the government, in the eyes of the law, a corporation is actually seen as a separate entity, meaning it's kind of like a separate person, okay? And the crazy thing about it is that in the United States, every single person gets their own social security number. Well, corporations, because in the eyes of the law are basically separate entities, separate people almost, okay? They get their own equivalent to a social security number, which is called an EIN, which is an employer identification number from the IRS, okay? So they are registered separate from you. So in the same way that maybe when you go to the doctor's office or when you kind of register for like a credit card or you register for a phone bill or something, you use your social security number, right, to be able to do that. When you do things for the purposes of a business, there is now a separation between you, your social security number, and your EIN, which is your actual corporation's kind of social security number, right? It's the identification number for a corporation. So visually, this is what that entire thing looks like, right? So for entities that are not incorporated, right? So for sole props and partnerships, there is no separation of liability. What that means is that the owner's personal assets, their own debts, are the same as the business's assets and the business's debts, okay? There is no separation between the two. However, for corporations like LLCs, S Corps, C Corps, again, you don't have to know the difference between these right now. We'll talk about that later on. But what you want to understand is that for this group, which is the corporation group, there is a separation for the liability purposes. So that means that the owner of the corporation who has their own debts, their own assets, if they get sued personally, XYZ, that is on the personal side. And then the business has its own assets, its own debts, its own liability. So that way, if it gets sued, they can't come after your personal car and all that kind of stuff, right? They can only go after the things that are within the business. Versus on a sole prop side of things, right? For those that are not registered as a corporation, both are actually the same. Does that make sense? I hope that's clear. Again, we've spent so much time thinking about how to explain this, the visuals, the team spent so much time to make this. Again, I wish that we had a training like this when we first started out in business to be able to simply explain it to us to understand exactly how all of this works. Okay, so that's what we went ahead and talked about right over here. You can pause and read it if you'd like, but I'll read it for you over here. In an unincorporated entity, that is basically not a corporation, there is no separation between your personal assets and debts and the business assets and debt. That's exactly what I said. And then in a corporation entity, there is a separation between the business and the personal side of things. And so this is what we are talking about, ladies and gentlemen, as the first reason why a corporation is very helpful. Because in a sole prop, even though it does not require for you to register, even though you can have a business bank account, even though you can get business tax deductions and all that kind of stuff, in a sole prop, the con of a sole prop is that if you get sued, you would still be liable personally. Okay, now, does that mean that it makes and breaks, like it just breaks the entire thing, like nobody should ever be a sole prop? No, because like we said, these are all tools, right? In the same way you have a screwdriver, you have a hammer, right? You have these different tools, and then you're going to need these different tools for different purposes. And so for some people, in certain circumstances, in certain situations, it does make sense to be a sole prop. And again, we will go ahead and talk about those scenarios and for who the sole prop is going to make sense for and who it's going to make more sense to actually go ahead and register as a corporation, okay? And so this is the first reason why corporations are beneficial, even though they do cost time, they do cost money, even though they do cost attention in order to actually go and incorporate, is because of the fact that they do provide that protection from liability. Okay, so as we look at our chart over here, right, we look at our kind of table. And so we were previously in the previous training section, we were only looking up until here, right? And up until here, you're like, yo, this sole prop thing, this is the way to go. This partnership, kind of no incorporation, that is the thing we should do all the way, right? Because it has all the benefits without any of the costs. But now as we add another variable, as we add another factor, which is liability, you'll see that we do get that X over here on the sole prop. And so the corporation is starting to win a little bit more to say, you know what? That cost might be justified in the right circumstance because of the fact that if liability is actually a thing, okay? Now, that is the first reason why corporations are useful, is because of protection and liability. The second reason that we're going to go ahead and talk about now is tax savings. So this is the second big reason why people spend money to register and open a corporation in order to save on taxes. Now, we're not going to go into tax law right now. That's going to be something that we talk about when we talk about tax and legal mastery. So that's a whole separate course. Once you get a little bit more advanced, we can start to build your understanding of tax and legal mastery, okay? However, I do want to just go ahead and little bit sprinkle, kind of marinate your mind in this understanding of self-employment tax, okay? So we already talked about business deductions and tax deductions. That is separate, okay? We're not talking about that right now. We've already talked about how both a sole prop and a corporation have access to that, right? But what we're talking about here is something called self-employment tax. This is something completely different than the business deduction stuff that we talked about, which is like, oh, I spent money on education, I spent money on software, I spent money on notebooks and stuff like that. That's a business deduction. Both sole props and corporations have that. But when we talk about self-employment tax is the part of your taxes that is paid towards Social Security and Medicare. Now, if you don't know what that is, okay, Social Security is a program by the federal government that way when you actually retire, there's actually some money that goes in there, right? So you pay into a pool and then it goes ahead and funds the people who need Social Security right now, and Medicare is also for healthcare later on as well, okay? So that is the kind of pool that we're talking about when we talk about self-employment tax. And again, don't worry, I'm keeping it extremely high level. We're just kind of layering this in. We're not going to talk about all of the different types of taxes. Again, we will talk about that when we talk about tax and legal mastery. But for right now, you just want to understand that there are three main types of tax, okay? So what you do is you have your income. Let's say, for example, you make, let's say like $75K a year or $100K a year or whatever, right? Whatever that number is. And then out of that, there's then going to come Social Security and Medicare tax, and I'll break this down in just a second and all the percentages, okay? Then you have federal income tax based off of what tax bracket you are in. And then if you live in a state that has state income tax, which there are, majority of the states do have state income tax, but there's some states that don't, all of these are going to come minus out of your income, okay? However, we are not talking about these right now. We are specifically focusing on Social Security and Medicare tax, okay? Now, some people, when they hear this, they'll be like, you know what? Coach, I already got this covered. My 9 to 5, my W-2, it already pays on my behalf from my paycheck, the Social Security and Medicare tax. I do not have to worry about this. Yes, that's probably true. But the thing is, you're going through business basics right now, right? You're learning what it means to be a professional entrepreneur, a professional business owner. So for a business owner, it's actually quite different, because when you have a W-2 from your 9 to 5 day job, what happens is that the company that is your employer actually pays for half of the Social Security and Medicare tax. Okay, so let's break down these percentages so you can understand what all this looks like. Okay, and again, don't get overwhelmed. Trust me, we're just marinating this. This might go over your head a little bit, but you'll be able to come back and refer to this over and over and over again. And I promise you, eventually, as you start to become more and more of a professional business owner, you're going to start to get this more and more, okay? Is that Social Security tax is 12.4%, okay? And Medicare tax is 2.9%. That's how much comes out of your paycheck, okay? Now, when you have a 9 to 5, a W-2, what happens is that out of your paycheck, your employer, instead of your company, I should put your employer here, right? So your employer pays 6.2%, and you pay 6.2% out of your paycheck, okay? Same thing with Medicare tax, 2.9%. Half of it is half of it is paid for by your employer, and then you, out of your paycheck, pay the other half of it. And so visually, this is what it looks like. So hypothetically, let's say, for example, your pre-tax earnings before tax, right, your EBT, is $75,000, okay? This is your employee salary income. Now, what's going to happen is that you are going to have Social Security tax, which is 12.4%, okay? Your company or your employer pays 6.2%, you pay 6.2%. Medicare tax, right? Half the employer pays, you pay the other half. And so therefore, your total tax adds up to 15.3% for Social Security Medicare. And then the company, your employer that you work for, pays this much, and then you pay this much. So what's the actual numbers, not the percentages, right? So on 75,000, theoretically, just kind of doing some back of the napkin math here, you would pay $5,700 in Social Security and Medicare tax, theoretically on paper, for $75,000 in earnings before tax. Now, keep in mind, I'm going to go back over here so you can remember this, that is not the total tax, right? Because that is only just one bucket of the taxes. Out of that, you will then have to further pay federal income tax and then state income tax, okay? We're only specifically focusing right now on Social Security and Medicare tax, okay? So you're following along with me right now. We're only focusing on this, and you understand that from your W-2 9 to 5, your employer is paying half of that, you are paying half of that. Now, you might see where I'm going with this is because now as a business owner, what happens? You don't have an employer, right? And so this is where the sole prop is at a disadvantage when it comes to that Social Security and Medicare tax. Why is that the case? Because when you are a sole prop, okay, when you're a sole prop, you are now both the employee and the employer, right? So in the previous example, where you have your 9 to 5 W-2, you have an employer, right? You're hired by a company. And so this is why I kind of laugh sometimes when people are like, hey, business owners, like, they're robbing people. Well, hey, the truth is business owners, they don't always have the best end of the stick if they don't know what the heck they're doing. Yes, they are able to go ahead and work with the system and use it for their benefit if they know what they are doing, which is the reason why you're going through this business basics course and to understand the foundations. So that way you can be one of those business owners who is smart, because you're understanding now the second reason why corporations are beneficial is because if you're a sole prop, you are having to be both the employee and the employer, right? And so what that means now is that you have to pay both sides of the equation. You have to pay the 7.65% that your employer would pay, and you have to pay the 7.65% that normally you would pay. And so then when you have a sole prop, what happens is that instead of calling it Social Security and Medicare tax, if you hear the word self-employment tax, right? And they'll say that it's 15.3%, that is what they are referring to. How do you get 15.3%? It's 7.65 plus 7.65, right? Both sides of the equation that normally the employer would have paid, because you are having to pay both of them, they then change the term to now becoming self-employment tax. Does that make sense, right? We're just making it very, very simple. Again, if it doesn't make sense, just replay the last couple minutes. It will make a lot more sense to you, right? So normally, I'm going to repeat this again, the employer would pay half and you would pay half, but because of the fact that you are now a sole prop, if you decide to be a sole prop, right, this is what it would actually look like, where you now have to pay both sides. And so you pay the 12.4% of the Social Security tax and you pay the 2.9% of the Medicare tax. These are now called self-employment tax because you are a sole prop. And so on that same $75,000 of income, okay, so 75K, before you were paying $5,700 in Social Security Medicare tax. Now, because you have to pay both sides, you are paying $11,000 in total Social Security Medicare tax, which is now called self-employment tax. Ouch, right? You're actually paying double the tax that a 9-to-5 W-2 employee would have to pay on the same amount of income, because of the fact that if you were a novice business owner, you didn't understand how this worked, you didn't understand how to save on taxes, you didn't understand that, you were a sole prop, come tax time, guess what? That is now an additional $5,700 How much could you do with $5,700? That's a pretty substantial amount, right? That is an additional $5,700 that you now have to pay in taxes because of the fact that you were not equipped in understanding how this entire game is played. Okay. And so this is what we're talking about when we talk about corporations. How does a corporation save you on taxes? Because what happens is that when you have a corporation, okay, when you have a corporation, you tell the IRS, let's say hypothetically, let's just use an example. I'm going to use the S Corp as an example. It doesn't matter which one you use, but we're going to have a whole separate training section about LLC. So for right now, I'm just going to talk about the S Corp. Okay. What you do is you tell the IRS, hey, I am an S Corp. Okay. So therefore, Mr. IRS, Mrs. IRS, we are now going to divide our business profit, okay, into owner's distributions and employee salary income. And then what happens is you only have to pay the self-employment tax on the employee salary income part of the profits, okay? Now, I'm saying a bunch of words. You're like, okay, this is going over my head. Wait a second, stick with me. Let me go ahead and show you a visual example. Okay, so this is what it looks like. You have your S Corp, okay? And so then you have the same $75,000 that we've been talking about. However, you now get to decide come tax time, hey, and this is not just come tax time, this is obviously throughout the year, you're kind of doing tax planning as well. But what you're doing is you're now saying, cool, I'm going to have 50,000 of that be owner's distribution. And I'm going to have 25,000 of that be employee salary income. Okay. And so that same 75,000 now got broken up because you can divide it because there's now a separation. There's actually two tax returns that's being filed. Okay. And then on the owner's distribution side of things, okay, on that 50K, you pay 0% in Social Security and 0% in Medicare. And you only pay that self-employment tax, that Social Security tax, that Medicare tax, both sides of it, on the 25,000. Okay, so now let's see what the numbers and the math actually break up to, right? So let me scroll down a little bit so you can see here is that the self-employment tax on the 50K, that is $0. And then the 15.3% of 25,000, guess what? You only pay now $3,800 in self-employment tax, okay? So now, check this out. I'm going to go ahead and put everything together so you can see how this all breaks down, right? So in your W-2 9 to 5, on $75,000 in income, you would pay $5,700 in Social Security and Medicare tax, okay? But then if a sole prop, because you didn't know what you were doing, you didn't understand the benefits of a corporation, $75,000, you pay $11,000 in self-employment tax, aka Social Security and Medicare tax, both sides of it, right? But then if you're savvy and you understand how this game works, guess what you can do? You can actually go ahead and split it up because you have a corporation. And now guess what? You only pay $3,800 in self-employment and Medicare tax, which is actually lower than what you would even pay if you were a W-2 9 to 5 employee. Are you starting to see how this game works? Are you starting to kind of understand the second major reason why corporations are helpful? Is based off of whatever that income is, right? So this example I'm giving you is for 75,000. This is where it depends. And when we get to the scenarios, you'll understand a little bit more, is that obviously if over here, this is like, let's say it's only 10,000. Well, if you run the numbers, the additional cost of having a corporation may not be worth it at 10,000, right? So there's a line of which, you know what? It makes more sense because I'm going to save in taxes based off of the income that I'm going to have inside of the corporation versus it might actually be better for you to stay a sole prop based off of how much money you generate in your business. It all just depends. And again, we're going to go over those options and what that line is. But for right now, we're just layering your understanding of, okay, wow, there is this whole other department, a different understanding of what is the benefit of a corporation. And now you've seen it right here with the benefit of an S Corp. Okay. Now there's an additional tax deductions and all this stuff that comes with corporations. I'm not talking about that right now. We're simply only talking about the self-employment tax. Now, another question that somebody might have is, hey, coach, why did you use the S Corp in the example? Why didn't you just use the LLC? Because we've heard a lot about LLCs. Like, why not use the LLC as the example for the tax deduction? And we're going to have a whole separate section on this. But the reason is because an LLC can kind of be confusing because it can kind of, based off of the taxes, can either be a sole prop or a corporation for tax purposes. Did I just blow your brain? Don't worry about it. We'll have a whole separate section where we're going to talk about it. So for right now, just disregard the LLC. I had to use the S Corp as the example in order for you to be able to understand this. Okay. So again, you can pause, you can go back, you can better understand this because I'm telling you, This is just basic fundamental understanding for you as a business owner. And literally, we are talking about the number one expense that you are going to have in business is going to be taxes, okay? And so it's worth for you to understand this. This is not tax advice. It's worth for you to understand this so that way when you do go meet with an accountant or a professional, you actually have a foundational understanding to even ask them questions. Say, hey, I learned this. Can you explain this further to me, right? So you understand what's going on here. Is this making sense? Yes, coach. Hopefully that's what you're saying, right? Yes, coach. My eyes have been opened to more about this game when it comes to corporations. Okay, so this, ladies and gentlemen, is the two big reasons why corporations are useful. Because of protection and liability, we talked about that, right? So with a corporation, you have that separation between yourself and the business, right? And then also the tax savings. Specifically, we talked about the Social Security and Medicare tax and the self-employment tax that is saved once you are actually a corporation with the proper tax filing. Now, you will see, I was not joking when I said that there are layers to your understanding, right? You started off this earlier training, you're like, oh, hey, you know what? 2 types of legal entities. We're already learning about sole prop. You're like, yo, this is beginner stuff. I get this. And then, boom. We just went ahead and increased the layers of understanding and learning that are going on here, right? So it's just a skill, knowledge times reps. Again, you're getting the knowledge right now. You're being marinated in this. And so it's going to seem a little bit overwhelming in the beginning because of the fact that this is the first time that you are being exposed to this. And so for anybody who's like, yo, holy moly, my brain is on fire, okay? I know. Trust me, we were there. We all started in the same place. Nobody was born knowing any of this, right? For God's sake, I know for a fact nobody was born knowing tax and accounting law, okay? But I promise you, the more you get exposed to this over time, the more multiple repetitions that you have, it will become easier, right? It's going to take at least 10 or 20 reps of you being exposed to these concepts regarding corporations and legal entities and taxes and all this stuff to wrap your head around it. But again, just like the first time you got exposed to riding a bike or driving a car or tying your shoes, there was a lot of things to remember, right? I remember the first time I was learning how to drive a car, I had to look at the mirror and then also turn lanes and put the indicator. It was overwhelming, right? I definitely almost hit a bunch of cars when I was turning lanes for the first time, right? Maybe you are in the same boat as well. The point is that in the beginning, it feels like your brain is working overtime to try and remember all the small things. But then the more you do it, it becomes effortless. That's why we call it the skills curve, right? So in the beginning, you're unconsciously incompetent. You don't even know how bad you are incompetent. But then what these trainings are doing is they're making you conscious of your incompetence. They are exposing the deficit in your knowledge of what you don't understand, what you don't actually know. But then the more reps you get with the knowledge, right? The more conscious you become and the more competent you become. And then you can get to the point where you are unconsciously competent. You can literally do it in your sleep. And now you are competent, a professional, and you are attaining levels of mastery. Okay, so with enough repetition, I promise you, you will get a hang of this. And the good news for your level of income right now as a beginner, you do not have to be a master of this stuff, okay? All you got to do is just be familiar with this stuff. You just got to know it exists. You got to just know where to find the training for your reference, right? And then again, like I said, as you start to get past $10,000 plus per month, then you can start to get literally more advanced into the tax and legal mastery side of things. But for this right now, these upcoming training sections that we're walking you through are going to be more than enough for you to be able to get those initial foundations and understand where you need to go. So you can actually focus on the very important things, which is actually generating money, right? So you don't want to get stuck with this stuff to the point where you're just worried about all this all the time and then you're not actually generating any money. And so that's why I do want to go ahead and remind you one more time, we are going to go through this a lot quicker, okay? So compared to if this was going to be like a tax and legal course by itself, obviously we'd spend so much more time diving deeper into it, but we're going to go faster through it because our goal is to get you the foundational knowledge so that way you can get to the tactical side of the corporation, get it started, get it in the background so you can get started on your business website, your new client agreement, you can get started with marketing and sales and getting new clients and all of that kind of stuff while this corporation stuff happens in the background. Okay, so with that being said, ladies and gentlemen, this has been this training that went ahead and talked to you about the major benefits of corporations. Up next, we're going to go ahead and explain LLCs because those are very different than what we have spoken about thus far, and they can be sometimes very, very confusing. So now we're going to go ahead and layer that level of understanding on here. But this training has all been about corporations in general, the benefits of them, why they are different from sole props. We hope you got an insane amount of value from this, and we cannot wait to go ahead and continue layering on your understanding of the learning for this. We will catch you in the next training section.